Welcome to Trading Lounge and the European indices for the 2nd of October. On the monthly chart here, this is how we're looking at the main structure here as wave 1 here and 2 here, and a nice 5-wave structure here for wave 3 here. And then for wave 4 down here, we've got an expanded flat pattern. So that means that we've got an ABC here, an ABC here, and then 5 waves in wave C for wave 4 here as an expanded flat correction, pulling back roughly to the wave 4 of 1 lesser degree. An expanded flat correction takes out, the B wave takes out the top here, and also the C wave takes out the low here. So we're looking from wave 4 here up to wave 5 here. And I suppose there's different ways to count this, but I'm considering it as 1 and 2 and 3 and 4 and 5. But we need to be mindful that perhaps this just edges its way higher here in a different pattern as such. Let's just move to the weekly chart here. So I was considering it like this here with wave 4 here. Moving up for wave 1, back for wave 2. But as I mentioned, it's possible that we could have wave 5 over here and a different structure building in here. It doesn't really matter just yet for this, but if we just stay with this particular structure here for the time being on the daily chart, from the wave 4 low here, we're looking at this structure here. This can also be counted differently as well, I know that. This pattern here is in line with the S&P 500 as a wave 4 and looking to push up, with also in line with NASDAQ stocks as well. So it's possible this can get a little bit uglier here as well. There's a couple of different patterns that we could play out for this. I guess, in a bit of a nutshell, that the 13,000 here, if that becomes the support, then we know that this particular pattern is on the right track and we'll end up going up for wave 5 here into this month, in line with the US elections as such. And let's just go to the 4-hour chart here. The way I've counted this wave 4 is like this here, with wave 3 here, an A wave here, B wave here, then 1 and 2 in here, then 1 and 2 here, and 3 and 4 and 5 here for the 3rd wave, 4th wave and 5th wave. And then looking at this as wave 1 here, and then moving back for wave 2 here, ready to move higher in this point. So it could drop a little bit lower here for this. So that's the 50-60% retracement level there for that. What we could do here, though, is we could look to go long above the 12,800. So a nice tested support on top of that 800 would give us the long trade on this side. So you could look for a classic trading levels pattern on the 12.8. And then look to be long from that side. This does look a bit bullish corrective at this point. Now this whole wave 4 here, I know that it can be counted differently on our website. You can see the different ways that it can be counted, but let's just see if the market pushes up from this point. Yeah, I'm just going to have to leave it at that, otherwise it gets a little bit complicated. So keeping it really simple, and also too, this count is possible, but there are other counts, and they would have equal basis as well. But taking this high out here would see us to the upside at that point, and anything above the 13,000, we would be on the bullish side at that point. But we also need it to be support there as well, because there is a count that can take us up into this space here and then take us down again from that point. So we'd want to be looking for support on this on that 13,000, but that's another story, and we'll look at that when we get there, and we'll have a look at the structure there as well. On the FTSE, look, it's much the same pattern as well. So, well, when I say the same pattern, I'm talking about this, the last week or so here. So we've looked at all of this coming down through here. Let's just go back to the daily chart for a moment just to pick up this thread. So we've seen this softness come into the market through here. We could count it from wave B as 1 and 2 and 3 and 4 and 5 finished here, and then pushing to the upside. Now, to confirm that, we would want to be above the 6,000 at this point. Being below the 6,000 at this point really keeps it in that keeps the bearish trend intact. So being long below the 6,000 is exposure for higher risk. Just bear that in mind. On the 4-hour chart here, it just labels this down through here as 1 and 2 and 3 and 4 and 5 for the C wave here for this. And really, this particular move to the upside here, it can be counted in 5 waves, so that's positive, and this can be counted back as corrective here, and this can be counted up as positive, and we can look to go long above this high here for this, so that's all good. But there's still case for this to move down here lower as well. This wave 5 here, that can be placed over here, and this can simply be, this simply can be here, an A wave here, a B wave here, and a C wave here, and then down further from this point. But taking these highs out here would eliminate that situation. So if that is the case, that's fine. If these lows get breached here, then you'll know that you're going to be going lower from that point. And you can short it, but just be very mindful, because when it hits 5.8 here, it will bounce. And it'll take some of your profit. So it's a good idea to take the money very close to the 5.8 if that's the case, and then if the 5.8 becomes the retested resistance, then you can move in from that side. So coming back to this space here, yeah, look, it's a bit of a long shot building it up off the low here, but it's equally as valid as being short or being long here at this particular point in time. So you know, when we came down to this low here, we were waiting for 5 waves to move up, and which we've had, and then we've been looking for the ABC pattern, which, to be honest, is a little bit complicated for wave 2, which I don't like. And also too, the time that it's taken, all of this here, this in terms of time compare as a wave 2 compared to wave 1 here, then that's a bit of a problem, because it should be less time than the wave 1 here, but it's not. But we know that this is a bit of a wet paper bag, this particular market, so we'll just bear with that a little bit through here. So from the low to the high here, this is the 61.8%. It's being supported there, but look, the long trade is the 5.9 as the support. I can't get it any sort of simpler than that, and if you can't work out what support is, then taking this high out here would also be helpful as well. But like I mentioned, don't go in early here, because it can just as easily move down as it can to the upside. And if it does go to the upside, well, then we'll be looking for support on the 6,000, where we can look to add to our positions, and we'll continue to add through here if that's going to be the case. Alrighty, I'm just going to have to leave it at that for the time being. Thanks for tuning in. Cheers.